Kevin, so many uncertainties and so many of them involving policy, things markets tend to be shy about. Is there anything, in terms of tactical buying, do you really have to wait for a turn of the calendar here?
Well, we need to see a turn in the data here. If you go, we review a whole lot of different things, but if we look at metals prices, those are down sharply. The credit spread is up sharply. Just the safe sectors are performing better than the higher beta sectors. There's all kinds of indicators here that are just showing more stress in the system that could manifest as caution in terms of how businesses plan their spending in the year ahead. It's only been a month or two. We can't make too much of this, and multiples have become lower, so stock returns from here could actually be better. But we need to see some turn in some of these data. We just have so many data points that, for the moment anyway, are pointing in the wrong direction. We're not willing yet to step in and commit new capital.
Data points and headlines, Terry. What are you telling your clients about the prospects for Jay Powell this morning?
What I've long said, Sarah, about Jay Powell is he's there for his term, or as long as he wants to be there, and the president's not going to do anything about that. What's always struck me about the president's criticism of Powell is not that he's getting ready to get rid of Powell, but that he can't, and he knows it, and he's complaining to insulate himself from criticism. It's not my fault; it's that guy's fault over there. I don't see anything about what's happened over the last 48, 72 hours to change my view in that regard. The fundamental about the Fed that everybody needs to understand is that it's independent of the executive branch, but the Fed exercises congressionally derived power. Congress will pitch a fit if he touches Powell, and so he won't do it.
Terry, what's so hard about having a conversation that says, look at retail sales, look at the strength of the consumer overall. This is classic late cycle chop, and the Fed's going to do what it has to do, but I've delivered to you a robust economy. How hard is it to have that conversation instead?
It depends on who you are. I assume you're talking about the president. What the president is doing right now in a number of different areas is heightening controversies. Some fights he's picking, some fights he's joining. But that has never been President Trump's style, and I don't expect it to change now.
Kevin, Dow's down 350. Do you have a problem with the Treasury Secretary making those phone calls and going public with it over the weekend?
Well, it's just a little unusual to go public with that, and we haven't really seen that before. But the way that that's been walked back has really been more about this preemptive concept, and really and the idea that there's nothing really to be concerned about. It just seems to me that it can be read in one of two ways. It could either be read that there is something that's concerning him, so therefore he made the phone calls, or the reality is that he is just trying to maybe walk back some of the comments on Powell, and at the same time make sure that if something does get worse from here, it looks like he's been out in front of it. So hard to tell what it really means.
Kevin, what's with the fall in oil? It's falling another 2%. I mean, clearly this is signaling some growth concerns. It's falling at a time where the dollar's falling as well, down 0.5%. What does that tell you?
Yeah, well, we're calling for lower growth next year. A lot of it has to do with a slowdown in emerging markets. They're still going to grow faster than the developed world, but we have to remember that the emerging markets control a lot of the demand side of the equation here for production. We've seen a big growth in credit there. I think emerging markets have gone something from 80 credit to GDP, 80% ratio 10 years ago to well over 100% now. So that growth is clearly unsustainable, and our best bet is that global growth decelerates a little bit next year, and that probably has a lot to do with a higher beta trade on the oil price.
Terry, I got two questions for you. One is, does it feel like we can reach a compromise on border funding at $2.5 billion, the way we saw out of some reports? And two, how does the market process Mattis McGirt, if at all?
Firstly, yeah, there's a compromise there to be had. I mean, whether it is for some additional border funding or reprogramming of some existing funding, taking money of other accounts and Congress saying okay to that. There's clearly a deal there. There's been a deal around the wall and the Dreamers that's been around for a year, and nobody's ever done it. I doubt we're going to see that grand deal at this point, but it's certainly there, number one. Number two, I think the markets ought to hold their fire a little bit on Madison McGurk. The way that the president has changed policy and changed out the leaders on his Middle East strategy, clearly spook a lot of people, number one. But number two, what they ought to do also is understand that the particular change in policy is something that was championed by a lot of people, including a lot, both serious conservatives and serious progressives and liberals. And this is, again, not quite what it seems to be.
Kevin, Dow's hugging 22,000, gave it up briefly a moment ago. What, if anything, stops this? What reverses it? Where's the catalyst? What could it possibly be?
Well, I guess it has to be a combination of things. Number one, it's, valuation and price always matters. So when we think about where we are today, we actually think that the long run expected return for equity is a little higher. Why? Because a year ago, the markets were fairly ebullient, multiples were higher, and now you're looking at a multiple today on the S&P, for example, that's either at or below its 10-year average. So that's actually a healthy thing. And credit spreads are widening, so there's a little more meat on the bone for an investor wanting to take another look at credit. But it has to be joined by some sense of a slowdown, at least in the momentum of all of these data points, which in the last month and a half or two have been moving to the downside. That could happen quickly. It could happen with the Fed maybe backing off some of their more aggressive rate tightening. It could happen with a breakthrough on trade. There are a lot of positive things that could happen that might turn this thing.
But
and
Kevin,
if that were to happen, we'd have a very good 2019.
So we're down another 2% on the S&P. These 2% moves are becoming the norm. The S&P is now within 0.5% of being in a bear market, down 20% since the last high. On a year where we reached a record high in October, at what point does this sharp slide become a self-fulfilling prophecy about the economy and the outlook for recession?
Yeah, well, you're right at that. You're right at that point. So if all of this negative sentiment in the markets spill over into the actual economy. So you look at a business, let's say, who says, well, we're taking our cue from the markets and we're going to cut back our investment spending next year. That cuts into profits. If you think about all of a sudden a business wants to borrow and they can't access the capital markets because investors aren't willing to lend that business money, then that, of course, drags on the real economy. And then you start sort of this grind, which eventually leads into a recession. We're not there yet.
But what is your S&P target,
that's the concern.
earnings target for next year, Kevin?
$160 or something like that for the S&P 500 would make sense.
Yep. Hey, Terry, is the market misunderstanding the Fed, or is the Fed not communicating clearly enough? You seem to have the Williams walk back, if you want to call it that, from Powell last Wednesday. Who's getting it right and who's doing it wrong?
I think personally, I think the Fed needs to communicate a little bit better. The criticism I've personally had for a very long time, back from when I used to run the committee in the Congress that oversaw the Fed, the ways that in this market with this sort of skittishness, my 2 cents to the Federal Reserve would simply be communicate much better on what you're doing and how you're doing it. I think they think they've been very clear. Certainly our own central bank strategy people have thought that they've been very clear about this, but they need to make a little bit of a breakthrough, I would say.